Joining us now for what this all means for investors is Gary Dvorchak from Blue Shirt Group, which advises companies in the U.S. and China. Gary, great to have you on the show. How are you advising companies right now?
Well, we advise companies that are trying to list in the U.S. stock market. And so, as you know, it's been pretty slow going in terms of Chinese IPOs. And that's been a function of a number of things, including COVID and issues around the audit, what have you. So that is one of the early data points in terms of things thawing a little bit in the relationship with China. We actually have seen a lot of Chinese IPOs this year. There have been over 40 companies that have listed the U.S. stock market. So it's a small element of what we need to see in terms of a greater thaw between the two countries in their economic relationship. But certainly it's one of many things that are moving in the right direction.
Yeah, and of course you have this establishment of a working group that's going to involve officials and businesses from both countries. It also seems this establishment of an information exchange around export controls as well, though the Commerce Secretary was very quick to say this is not going to be affecting policy. This is just going to be an informational exchange about the policy that's in place and going to stay put. How much does that go towards that thawing? How helpful is that to businesses?
Well, there's two elements to the whole situation. One is the general relationship, and then one is the economic impact. I think all of that is positive for the general relationship, and especially, look, you have a lot of experts on that do a lot of research. My expertise is I've lived in China for 10 years, and I just talking to people all the time. And one of the things that I don't know if it's appreciated or not, but amongst Chinese, they feel like they are under attack from the United States. And this is their viewpoint, right or wrong. I'm not advocating it, but they do feel like they're under attack from the United States, and the United States is trying to harm their economy. And, what they see is the high profile technology related restrictions that, we're all talking about. I mean, they don't see the billions of dollars of goods that end up on the shelves in Walmart and things like that. So the whole relationship economically is probably not as bad as it would be depicted in the media. But at the same time, that's what people think. And so a lot of what you're seeing now is kind of, if nothing else, the U.S. Putting out an olive branch and saying, look, we're sending our top level people over. We're preparing for Xi Jinping's visit to the United States this fall. We want to have more open lines of communications. I don't know if it changes a lot when you get down to the actual activities economically, but certainly it doesn't hurt.
So let's talk about the Chinese stocks for a moment, Gary. So the cloud over the Chinese economy reminds me in a way of the pessimism in U.S. markets last fall. What's the bull case for Chinese stocks here, whether it's that the pessimism has been priced in or maybe that the real estate issues there aren't as immediate as some think?
Well, the bull case is really a value case, because if you look through the wide range of companies that are trading in the U.S., the valuations, even now, they're off the bottom. So the October of 2022 was the bottom. You had probably 40 to 50 companies that were trading below cash, right? And now a lot of them are trading closer to cash value, but certainly they're getting zero enterprise value. And so anyone that is interested in Chinese stocks, you really got to be a value player, and you have to be looking at it from that perspective. There's still a lot of issues around their domestic economy. And honestly, almost all Chinese companies, even listed in the U.S., are really domestic stories. I mean, you look at Alibaba, the biggest Chinese company by market cap, and they don't do anything outside of China. I mean, it's a domestic story. And you go through the whole list, and JD and Baidu and all the others, they're domestic stories. So they do, over time, need to have a more robust domestic economy. But having said that, what's your risk when you're paying so little to buy them?